What is accounting rate of return, class? Class, are we on the same meter bound? Class? What's the accounting rate of return? I think some of you have done this before. Is that not the case? That's my assumption. Hello? Mamadou M. Yok, are you with me? I'm going to start naming since nobody wants to answer me. Aha, Amadou. Amadou Sedikan, you were not in yesterday's class, were you? And today you're very quiet.
Hello, Mr. Governor.
Amadou, yes. Is it the network or what? You've not been participating today, and you were not on yesterday's class, were you?
Yeah, no, yesterday I was engaged in another class.
Engaged. MA3 is very important. Engaged.
I'm following,
Okay, look at this Jete Kundaka. Buba, I hope you are not eating. Buba Jete.
Yes, sir. I'm not eating there.
You are not eating.
I'm about to break my fast.
About to break. So you want me to believe that you're fasting? Okay. Sehu Kinte, just trying to pick at random. Sehu, are you with us? Sehu Kinte?
Sorry, Mr. Governor, you're asking what is ARR?
Yes, what is ARR? Account rate of return, yes.
Well, I know the function, but I don't think I can define. I think it is a financial ratio used in capital budgeting, something like that.
It's a financial ratio used in capital budgeting.
Capital budgeting, yeah. That's what I understand.
Okay, yeah. That's a good try. Philomen, I didn't hear from you yesterday. Were you in my yesterday's class? No?
Yes, I was, but I'm not feeling too good.
Oh, yes. You don't sound the same. Okay, I'm sorry about that. Right. Okay, so accounting rate of return. Actually, to be honest, if you have to tell an accountant what an accounting rate of return is, your ROCE is the same as your ROS, your return on capital employed. The only difference is its denominator is either an initial investment, that's the initial capital outlay, or average investment. That's it. So that's your ARR for you. It's an accounting rate of return, which is the same as your ROS, like I said. Okay, so let's go through it quickly, and we will just do one example. We will just do one example, and then that will be it for the day. Then on Saturday, we're going to look at compounding and discounting. And then on Saturday, it's going to be loaded. Please make sure you have your lunch before coming to class, because it's going to be WTF, work to finish. So we're going to do compounding, we're going to do discounting, we're going to do NPV, we're going to do IRR. Okay? So we will start from 3:30, maybe up to midnight, if you're going to be with me. It may not take you up to midnight anyway. Right, so accounting rate of return. Okay? So the accounting rate of return, as the name implies, okay, is expressed as an average accounting profit as a percentage of capital outlay. Same as ROS. Okay, like I said, the denominator is the capital outlay. That's the only difference. Okay. This is another technique when we are appraising long-term investments. And its main difference with the rest of the methods is it uses accounting profit rather than cash flow. And by saying that, you definitely know what that implies. Okay? By saying that, you know what that implies. That is, when we use accounting profit, we're going to have problems. What problems? Accounting profits are not reliable, to be honest, for decision making. Why? Well, I'm an accountant. I know what accountants can do to get their profit. Okay? Of course, we are guided by rules and regulations. We are guided by GAAPs, generally accepted accounting principles, the IASs, the IFRSs, the FRSs in the UK, the IPSAS, that of public accounting, you know, and of course the ROFs, that's for Islamic financial institutions and so on. So we're guided by all that. But then, just like the lawyers do, the law is the law, but then sometimes they can make the law to be in line with the way they want it to be in, isn't it? So the same. Accountants also, we have laws that we follow. Those are our GAAPs, just like the ones I've mentioned, but then we can play with them. So that's why the ARR method is very weak, because it depends on the accountant's profit. The accountant's profit is subjected to a lot of different interpretations. Like I said, it can include notional costs, like depreciation, amortization. Okay, it can include provisions. Okay, it can include non-cash items like credit sales, you know, and so on and so forth. Because an accountant's profit is prepared using the accruals concept. Okay, so it's a good method also, but then not reliable. So that's why the first two methods, the payback period and the ARR, you can never use them on their own to take any investment appraisal decision. Don't try it. Your investment appraisal decision is not going to work. We've seen with the payback period how it happened. Okay, we've seen a situation whereby there's a particular project that pays back quickly, which will be favored by the payback period method, but then the other project will pay back later, but then it has got more profits. It has got more cash flow. Okay, so because of that, these two methods are not the best method. Advantages is quick and simple to calculate. Of course, it's a familiar concept. And of course, whatever you get is on a percentage. You know, accounting profit, of course, all accountants know how to prepare financial statements and so on and so forth. You know, we can easily calculate them. You know, of course, it looks at the entire project's life, you know, and so on and so forth. But then still, that doesn't make it a perfect method. Look at the disadvantages based on accountant's profit. All what I was explaining. Not reliable, not reliable. Okay? Accountant's profit is not reliable. Let's look at, for example, IAS 16. Okay? IAS 16 is about PPE. Okay? PPE, you have at least 2 or 3 depreciation techniques that are allowed. Okay? And each of those depreciation methods have got an implication on your profit. So you can choose the one that may favor you. Okay? When you're doing your provisioning, okay, maybe in the Gambia, except for organizations that are guided by CBG's prudential rules, where you can do your provisioning, you know, in different ways, you know, that will suit you. provided it is part of your accounting manual. Okay? So we can do a lot of things. You know, I'm sure for some of you who have done, I used to teach this subject. What is the name of this subject again? Accounting theory and practice. There's a topic under it called creative accounting. Okay? Creative accounting is not illegal. Okay? It's not illegal at all. Okay? So it depends on how you use it, to be honest. Right, so ARR is not the best way, to be honest. It's a relative measure, of course, which takes no account of the size of the investment. It takes no account of the length of the project. You know, it ignores time value of money, just like the payback period also does. Okay? So this is the trouble with accounting rate of return. So how do we calculate it? We calculate it using the accounting profit, the average accounting profit. Because two methods. The first method, the average accounting profit divided by the initial capital outlay or the initial investment, cost multiplied by 100. And the average method is the average accounting profit and the average investment. Okay? So the decision rule will always be like, how do you decide to say whatever percentage I arrive at, whether it's acceptable or not, depends on the organization's policy. The organization could say that any project that we implement must be in compliance with 25% ARR. So the decision rule is if it exceeds that particular target, then you accept the project. But if it does not, you don't implement it. You know, we've seen the decision rule for a payback period. The payback period, of course, the decision rule is you always choose a project that pays back quicker. Okay? So the second method, of course, the average accounting profit over average investment. The average investment is always the initial investment and the investment at the end, which is usually the scrap value, divided by 2. Okay. Right, so let's just do this question and we call it a day. Now, 10 minutes, we are done. 10 minutes, we are done. So let's look at the ARR question, the accounting rate of return question. Okay. Are we together? Are you following? Are you following? Hello, class?
Yes, we are
Yes,
following,
Mr.
Mr. Fofo.
Yeah.
Okay. This question is on page 5 of your, handout. So if you haven't got it, please screenshot it because I'm going to go back to our spreadsheet file. Yeah, I'm going to go back to our spreadsheet file. Okay, I'm going to go back to our spreadsheet file. Right, so screenshot it, if you may. Right, so right. So here we go, back to our investment appraiser spreadsheet file, Google Sheet file, yeah? Okay. So are you ready to go? Shall we do this question? Shall we?
Yes, sir. Proceed.
We proceed. Good. Thank you. So I'm going to read the question quickly. It says a project involves the immediate purchase of plant at a cost of 110,000. Okay. It will generate annual profits before depreciation of 24,000 for 5 years. This is annual profit before depreciation. Okay? Okay? What is profit before depreciation? Is it accountant's profit or is cash flow?
Cash flow.
Profit before depreciation is cash flow. Excellent. Yes, it's cash flow. Okay? Because once you depreciate it, then now it will become profit that you will not trust. Accountant's profit. Okay? No, you have to trust your profit, yeah, because you are an accountant. Okay, I'm just joking. But actually, accountant's profit can be subjected to a lot of manipulation. Okay, for those that are in practice will know what I'm talking about, or maybe if you reach high up there, you'll know what I'm talking about. Okay, but that should not make you, feel that you should manipulate your profit. No, 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 no. Whatever you're doing, like I said, a lawyer can take a case, actually, the case may be a murder case. The guy who did the murder might be completely guilty in the eyes of everybody. But if the lawyer is very good, he can use the law against the opponent, and the person can be set free. So it's just a question of using what is correct in a way that favors you. Okay, and you still be, it will still be in order. Okay. Okay. So we're going to create a new worksheet. Let's do this quickly because it's already marked. So if you click on the plus RC, that will give you a new worksheet. Then I'll just double click this. I'll rename it. I'll call it ARR question. I'll just call it ARR question because this is the only question we're going to do in ARR, accounting rate of return. So I just say ARRQ dot. Okay. So I'll read the question again. A project involves the immediate purchase of a plant costing £110,000. It will generate annual profits before depreciation of $24,000 for 5 years. We agree that this is cash flow. Okay. Scrap value will be $10,000 at the end of the 5th year. Required. Calculate the ARR using the initial and the average investment methods. So 2 methods, the initial and then the average. So if it ever comes in exams, especially on its own, which I doubt, you will be told how the examiner wants it. Okay. In none of the professional exams, they'll come on their own, to be honest. Maybe at the initial levels, the account rate of return and the payback period, they may come and are mixed with other subjects. Like you will see when we're doing internal rate of return, you will need to calculate ARR, okay, as a first guess. Okay, so we'll see how to look at that. Okay, so right, we're going to leave this part this time around. We're going to start our workings from 13. No, this time I think we can put everything together. There's no need to put any workings. So the first method is what? Using the initial method. So before we start the question, let's ask ourselves, what is this 110,000? What is this 110,000? Are you with me?
Hello?
Are you with me? Do you feel tired or? Yes.
Initial investment.
It's the initial investment. Okay, good. And it's going to generate profits before depreciation of 24,000 for 5 years. We all agree this is the cash flow. So as such, we need to depreciate it. Okay. What we need is accountant's profit. accounting rate of return is always calculated on accountant's profit. Okay? So an accountant's profit is always after depreciation. Okay? So the scrap value is 10,000, which makes life a lot easier for us when we are calculating depreciation. Okay? So the first method is the initial investment method. What formula should we use for the initial investment method to calculate our ARR? So the first one, which is
average annual accounting profit all over
excellent.
initial
So we'll
investment
have our
multiplied by 100%.
average annual accounting profit. We put them in caps. Average annual accounting profit. Okay? Divided by initial investment. Okay? We put it in brackets. Multiplied by 100. Let's use the times. So this is the formula we use for the first one. Okay, and how do we do that? Okay. First, we say what? The average annual accounting profit. How do we get the average annual accounting profit? What we have been given is the annual cash flow before depreciation. So that means we should depreciate it and then take the average. So the average will be over 5 years, isn't it? So what we'll do is we will take the 24,000, which is the annual cash flow, we multiply it by 5 years to give us the total cash flow for the period. Okay, and we deduct the depreciation. That will be the total depreciation. We deduct the total depreciation from there. It's 19. And then we divide that by 5 to give us our average. So now we know that for the cash flow, it's going to be 24 times 5. But what about the total depreciation? What will give us our total depreciation?
The depreciation will be equal to the cost of the asset minus the scrap value divided by 5 years.
That will be the annual
That's the number of
depreciation.
years.
That will be the annual depreciation.
Yes.
I'm talking about the total depreciation.
Yeah.
I'm talking about the total depreciation, yeah. So the total depreciation, just like you've said it, is the cost of the asset less the scrap value. That will give you your total depreciation. Okay? So that's what we going to do. So I'm going to do a formula. Okay, let's watch. We say equals, okay, equals, bracket opens, 24,000 multiplied by 5 years. We close the brackets. Okay, minus our total depreciation. What is our total depreciation? Is 110,000 minus the scrap value. Okay, so now we want to get our total profits, and if we want to find our average annual profit, our average annual accountant's profit, we're going to divide it by 5. So, but before we can divide it by 5, we must follow the board mass. So we do one bracket, open and close, so that we can have the whole number, everything, because we're going to take everything divided by 5, isn't it? We enter. So that gives us 4,000. So I'm going to bring this formula so that you can see it easily. So I just copy, I exit, I'll do the formula here, paste. Okay, so this is the formula we are trying to put. Can you see? So it's 24,000, which is the annual accounting profit multiplied by 5 years, less the total depreciation all over 5 years. You can have another way of doing it, okay? But this is the preferred method. Okay, so we take this 4,000 to 2 decimal place and we remove the decimal place. So this one is what? It gives you the first part of the question. And the first part of the question is the AA, the triple AP. That's the average annual accounting profit. Okay. So we divide that by, so what I'm going to do is let me bring this forward. Just cut this, paste it here. I cut this and paste it here so that we can have our first one, which is our AAAP. Now, we know our initial outlay, isn't it? We know our initial outlay. So now, what we have to find is our ARR. So our ARR is equal to, what is our ARR? It's equal to the average annual accounting profit divided by the initial investment. That's the first method. So we've already calculated the average annual accounting profit, which is 4,000 divided by what? What's the initial outlay? The initial investment? What's the initial investment?
110,000.
110. 1, 2, 3, we enter. So if we enter, this is the number we have, we express that into percentage. We express that into percentage, that gives us 3.64 into 2DP. Okay, so we can come to B. We can come to B. So B is what? So I'll just copy this. Just copy this, I paste it here, I amend it. So this is not going to be, the numerator will not be the initial investment, but it will be the average investment. Okay. So I'll take off the initial, I use the average. Average investment. Are you following, everybody? Okay. So we know our AAP, triple AP already, so we can just use that from here. Okay, so I just press equals and I click on D2, I enter 4,000. Then now we have to calculate our, before going to our ARR, let's do our average investment. So I'm going to copy this from here. I don't have to do typing. Once it's already there, you can copy part of it. Then I come here, I paste. So that's my average investment. So my average investment, how can I calculate my average investment? Please give me the formula. Give me the formula. That's the last one we are doing. So we are done in 5 minutes, please. Bear me out. If you are tired, to be honest, I'm more tired. Today, in fact, the whole day I had headache. I was, in fact, not thinking that I was going to make this class, to be honest. Just that I promised you, that's why. And I still have my headache. So please, don't feel bored. Let's do this so that we can complete this, yeah. So what is our average investment? Can you give me a formula? Can you give me the formula, please? Yasin Cham, you didn't talk the whole day today. Yasin, can you give us the formula, please?
Mr. Morgan, I am talking.
Oh, sorry.
Yeah.
Sometimes when you talk, when I'm on the different screen, so yeah, anyway, that's all right. Right, so who again? Alaji, yes, it's Alaji who did not talk. Oh, Alaji, you also want to tell me that you've spoken, yeah? Sedika, Alaji?
Yes, equals to AVG.
Right, so Alaji is guiding me. I say, okay, I say equals AVG. I type AVG. Eh? Okay. Can someone help, please, quickly, so that we can finish this? What formula should I put here for average investment? Where are our Excel gurus? Where are they? Spreadsheet gurus, where are we? Mohammed K. Jane. Jane, you are on the background. You've not said anything.
Hello, Mr. Famana.
Yes.
Initial investment.
Okay, I just want you to give me as if you're going to do it on spreadsheet. Equals?
Initial investment.
The initial investment amount. Give me the initial investment amount. 110,000.
110,000. Plus the scrap, which is 10,000.
10,000.
Divide by 2.
Divide by
2. You put in bracket the first set.
The first set.
Yes. That is the 110,000 plus the 10,000 in bracket. Then you divide by 2.
Okay.
Yes, and enter.
Okay, let me put them in brackets. It's safer to put them in brackets. Okay, you see? When I did not put them in brackets, look at the answer, 115,000. When I put them in brackets, look at it. So you have to obey board mass, just like when you're doing it normally and using your calculator. So it's really, really important. You have to put them in brackets. Okay, so we're going to steal the how to call it, the formatting on 4,000. So we're just gonna click on the 4,000, click the paint format, and we click here. See, it has given us. That's an easy way of stealing a format. Okay, so now we have our ARR. This is our ARR. So can someone give me the formula for the ARR? Yes.
That AAP
Divided by
No,
AI.
give me, just tell me how I should do it on spreadsheet. Equals?
Oh.
Yes. D8.
D8, Divide by?
D9.
Divide by D9,
And we enter.
Enter. Okay. If you observe, when we did the first ARR, did you see any multiplier by 100 here? No. If you are using spreadsheet, what you do is, after doing your division, just format the cell to a percentage format, and Excel will straight away do the multiply by 100 without you doing anything. Okay? Look at it. This was the function I put here. I just copied that. Then I just replicate it here so that you can easily see it. Okay? You see? This is what I did on this formula. Okay? Just like what I did here. So the same thing here, you do the same thing. So don't bother yourself after doing one format and then you start clicking this and you want to open, oh, I'll go to format down. Use the format for this, the format for the 3.64. So just click on it and click the paint format. It's called what? Paint format. In Excel, it's called paintbrush. So just click on this and then you come and click here. You see, it gives you the format straight, 6.67. Or if you want to take it to 1 dp, it's 6.7. Okay. So I think this is where we're going to stop for the day. There is another question. There's a second question. Please do that on your own. Okay, do that on your own. So that is going to be added to what we did yesterday. So yesterday I gave you a homework add this one there. So this one will also be considered to be part of your 25 marker. And so people are going to start hating me because I'm giving them too much work. Please, the reason why I'm doing this, I want you to be very, very, very conversant with spreadsheets. It's good for you. I bet it's good for you if you are going to stay in this profession. Okay? So that's why I'm doing this. And besides, MA3 is a core paper for accountancy students. It's a core paper. Very, very important. I'm not saying that it's not the most important one. If there is a subject that's the most important one, it will be a second one. Maybe if there is a subject that is more important than this, maybe your financial accounting. You know, and your financial accounting, well, the reason why it may be more important is because it's statutory. Okay? But management accounting is very, very, very important. So it may be the second most important one. So definitely it's a core paper for you. And besides, you are lucky that you are getting this spreadsheet stuff. Okay? So please make the best use of it. Okay? So your assignment will be to do the question at the bottom of page 5, which is arrow. It says arrow wants to buy a new item of equipment. So do that on the same spreadsheet that you're going to do the assignment of yesterday. You know, I gave you an assignment yesterday. So do them on the same file, on the same file. So let the first sheet be that of yesterday's and the second sheet be that of this one. I hope I'm clear.
Sorry, Mr. Fofana, no.
Yes, Mr. Fofana.
I'm not clear. Okay. What I'm saying is, you know, we have done ARR, the first question. There is a second question which starts at the bottom of page 5 and it ends on the first half of page 6. So I want you to do that question using Google Sheets. For those of you who were here yesterday, I've asked you to do that assignment using Google Sheet. So what I'm trying to say is use the same file, but different worksheets. I hope I'm clear now.
Yeah, that is clear, Mr. Fofana.
Sorry,
But
Mr. Fofana.
what I want to ask is, are we going to create another Excel spreadsheet file different from the one that we were using before?
Yes. In fact, yeah, I said this yesterday. The homework for yesterday and today should be on a new Google Sheet file, not Excel, but Google Sheet file. So do it on a new Google Sheet file. So the first worksheet that you're going to do will be for yesterday's assignment. The second worksheet will be for today's assignment, but all on one file. And you share with me, just like what I said yesterday. I hope I'm clear now. Am I clear?
Yes, sir, you are clear.
Very good.
But Mr. Fofana,
Please, if you say I'm clear, don't put any but there, Demba, again. What but are you going to say again?
no, I wanted to ask well before that. I don't see the question you are talking about.
Oh,
the assignment. You don't send it yet. I don't know.
Of course, okay. It's still saying loading. But in any case, I'm going to send it to you. So don't worry about it. I'm definitely going to send it to you. Okay? So you'll get it. Actually, because of the strength of the internet, the file is very big, so it's still, uploading, yeah? The reason is, yes. Oh yeah, no. The reason is actually it's supposed to get my WhatsApp is connected to my laptop. Okay, so because I've put my phone, I think it will come very soon. Because my phone was on airplane mode, because I usually put my phone on airplane mode so that nobody can, call me and get me through. So the WhatsApp is connected to, now it has landed. Okay, it has landed now. So now it's there. Go to your something, your WhatsApp. Can you see it there? Can you see the lecture material?
Yes, I've seen it now.
You've seen it now, yeah. The reason is actually my phone was on airplane mode, so the two were not communicating. You know, my laptop is synchronized to the phone, so whatever I have on the phone is on the laptop. So because I have switched the phone off, you know, it was not taking it. Okay, so I think I'm clear as to the assignment. We're going to stop here. Thanks so much for coming. So please try and join me on Saturday, inshallah, at 3:30 for our last class. So on Saturday, we're going to look at compounding, you know, compound interest. We're going to look at discounting, and then we'll do NPV analysis and IRR, and then that will be the end of it. Okay? So Saturday's class is very, very important. We're going to start from 3:30 up to any time we finish. Okay? So sorry for taking all your time, especially your Salah time. I'm really sorry. I don't like to do it. It's past Salah time, you know. But I hope you'll understand. I just want us to make sure we complete whatever we're supposed to complete for your benefit, you know, and that's it. So before we end, I hope you have enjoyed today's class, and I hope you've learned something new that you can be able to practice at home or at work. If you miss out on anything, like I said, this video will be uploaded. I mean, the videos will be uploaded to YouTube by tomorrow, inshallah, because today, you know, I'm really, really tired. To be honest, I just managed to come, but I have headache. I was really, really tired. I've not been resting all this while. So I'll try to upload the videos and the rest of the material tomorrow, inshallah. Okay, so thanks very much for coming. Thanks. Hold on. Thanks for coming. So see you on Saturday, yeah? Thank you.
Okay, thank you, Mr. Fofana.
Okay, thank you. Hold on one second.
Auntie Anna.
Hold on.
Thank you, Mr. Fofana.
Mr. Fofana,
Yes.
do you have yesterday's lecture material on the WhatsApp page?
Yes, I've sent everything this morning. I sent this morning. Sent everything this morning.
Thank you very much, Mr. Fofana.
Thank you.